Thank you for joining Empower Series YouTube channel. Today our segment is on the T on taxes. This is going to be an awesome segment because you're going to be able to be presented by me, myself, Brittney Kennedy. You're going to be able to see how to choose your tax professional, our tax scams out there, the tax industry itself, how to understand the new tax law, how it's going to be applicable to you. Make sure you check out the entire video because you don't want to miss a second of this video. Thank you Empower Series for allowing me to put together this awesome event and you guys putting this together, and thank you for Comerica for sponsoring this. The community needs you and we appreciate each and every one of you out there. Thank you. Before we even get started, I just really want to tell you guys, you can leave here right now and you've already left with so many jewels already. Just from what Clifton shared, Eric could tell, this is me. I'm like, hold on, that's Eric over there. Let me go talk to Eric. But no, just knowing someone who can recruit. He's like, I know all type of recruiters. And what I've learned, the best thing that I've learned from going to school is not what you know, it's who you know. It's who you know. So they keep saying network, 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 network. You can have the talent, you can have the knowledge, but if you don't know anybody and you don't get yourself out there to meet people and greet people and let people know who you are, sell yourself, you're not going to go as far as your potential really is going to allow you to be. So he's a person to talk to. Everybody's a person to talk to, as a matter of fact. The other thing is this accounting career awareness program. This is amazing. It is amazing because that comes back to me too, because as he said, I'm from Detroit, haven't been into Dallas, and I kind of just been going through life, just trying to stay afloat like everybody else. But these are some of the things that I think about, not even knowing that they're out there already. Why? Because I'm not a part of the Black accountants, and I need to be. I need to be a part of this to understand what's out there. I'm a teacher at El Centro. And one of the things that I say all the time is that there's not enough of minorities, especially African-American men, that is in accounting. And people, the first thing they say, oh, you an accountant? Oh, I'm bad at numbers. I was the worst in math, the worst. But what I am good at is I'm detail-oriented. I can use an Excel spreadsheet, and I love Google. So that has allowed me to be a great accountant, is that I have determination to not give up, to figure out what my issues are, to learn how to figure out what it is to fix that accounting issue, and to be able to move forward. You don't have to be a genius in accounting. I'm not. Not in accounting, I'm sorry. In math, I'm not. So this is a great program, especially to refer people to, because we already know people in our community, and I'll get to talking about the mentor program that I have with the nonprofit, is that people in our community don't think that they can be an accountant. They don't think they can be a doctor. They don't think they can be working for Comerica. They like, oh, you work for Comerica, you must be smart. I'm not saying you're not smart, Eric. I'm not saying that. But Eric was determined enough to keep moving forward to get to that position that he needs to be in. Eric's no smarter than you. You're no smarter than this person. It's just the determination that you have to get and accomplish what it is that you want to accomplish. So with that all being said, Clifton kind of introduced me a little bit. Just tell you a little bit about my story, my background. As he mentioned, I'm originally from Detroit, Michigan. I moved here about 10 years ago with my then boyfriend, now husband, who's actually in the back corner. I guess he waved at he's in the back corner. But I was finishing college. This was about 2010 for my bachelor's degree. And of course, my husband had just got laid off. The economy was very, very bad in Detroit. So we knew that obviously we needed work. We needed to be able to, turn this off. But we needed to be able to survive and be able to pay our bills, etc. And if we wanted to start a future together or whatever it is we needed to do. So we decided we were going to move out of state. We looked at in Memphis. To us, Memphis was just like Detroit, so we hurried up and got out of there. Then we came to Dallas. We drove down to Dallas, took a little road trip, looked at all the buildings. We were like, hey, these buildings, Detroit has a lot of vacant buildings. So we were just amazed at the fact that these are all these buildings and they're occupied with all the people. So we were like, hey, we're going to give it an opportunity and see what happens. Besides, we were wearing a light jacket and it was in December. So we were pretty much sold off the weather itself, but we didn't visit in the summer. So we had a rude awakening once we actually got here. So the third place was North Carolina, but we decided to just come to Dallas. If it didn't work out, we would go back. We started from zero, we're gonna go back to zero. So I don't care what it is that you're doing, that's always my mindset. What am I gonna fall back to? If I start my own business, worst case scenario, I'm gonna go talk to Eric and I'm gonna get me another job. What am I losing? maybe a couple months. Maybe my husband might have to cover rent for 1 month, I don't know. But I'm back to where I needed to be. I'm not losing anything. So once I came to Dallas, I got my master's degree from Dallas Baptist University. I actually moved to Texas sort of to teach. My bachelor's degree was in business as well. My mom she's owned 3 daycare centers, has a home daycare center. I kind of get my entrepreneurial spirit from her. I knew I always wanted to be an entrepreneur. And like Clifton said with his son, I never knew what I wanted to do. I didn't know what my purpose was. So if you continue moving forward, your purpose will find you. If you stand still, your purpose is not going to find you, and you're not going to find your purpose. You have to continue moving forward to find what your purpose is, and everything will kind of work itself out. So obtaining my bachelor's degree, and my master's degree, graduated from DBU. At that time, I was working for Honda Finance, and I got my master's degree in finance. Never wanted to get my master's degree in finance. It was sort of, I want to teach at the higher level. Dean told me, well, you need to make yourself marketable. We're hearing that word again. So if I want to get a job, I was like, okay, well, I'll just get it in business management. So that sounds fair enough, easy enough. She said, no, you're not going to be marketable. You need to do finance. Never did I look at myself as a finance person, let alone having to take 4 finance classes in a semester. As you can see, I'm still standing. I didn't die, even though I thought I would die. I made it through. So when you're in that situation and you feel like you could just cry every day, but just continue doing what you need to do and cry, but keep moving forward. So that's sort of how I got into finance. Once I was looking for jobs, I was looking for all these jobs, and this CPA thing kept pulling up. So here I am, a young, I think I was probably about 24 years old, African-American female, just finished my master's degree in finance. People would probably at this point think I'm hot stuff. I didn't even know what a CPA was. I'm Googling CPA. This is why I think this is so important, because we don't know what this is. My parents didn't tell me what a CPA was. My mom had a CPA for her business, and I still didn't know what it was. Because you have that, you don't need to be in grown folks' business. And there is still a thin line between grown folks' business, but the difference between other ethnicities and I think African Americans is that, and there's a thin line, because I have clients, Caucasian clients, they do their kids' taxes, and they be like 30, 40. I'm like, look, little Johnny need to do his own taxes. He is too old. But then you have ones who will say, okay, this is my accountant, and they introduce them from the time that they're filing their own taxes. This is who you go through, and I go to you because my parents go to you, and this is what they told. So they're telling them, and they're introducing them to these things, and I just think this is where we lack at, and why this program here is so extremely important, and I actually want to be involved. So I want to talk to you about that and really be involved, because that is my passion, to spread awareness about every and anything. So that's, once I finished with, I guess, back to going to school and just the whole process, look for CPA. I actually took classes back at Mountain View, and that's when I started sitting for my CPA. I'm still sitting for my CPA, I think 2-3 years later. I have 1 part passed, it's 4 parts. I just took 2 parts. My last 2 parts, I scored a 74, you needed 75 to pass. Y'all think I didn't want to cry? Both times? You don't think I didn't cry? But I'm not going to give up. I'm going to continue going. I'm going to continue taking these tests, and these are 4-hour tests. Each one is a 4-hour test. So this is nothing to play with. However, I mean, you a CPA, I'm like, thank you for, for you doing it. But it's nothing lightly to pay. It's passable. It is very well passable. But you have to, everybody's life is a little different. I got my own business, obviously extremely busy in the middle of tax season. I try to my husband tell me all the time, you be doing too much. He be like, you be doing way too much. And honestly, I do. I do too much. I need to sit back and really concentrate on what it is that I need to accomplish. So that's just sort of where I currently am. And then once I actually got into accounting and started taking classes, I started working for Robert Half, which, anybody know who Robert Half is? So yes, they're the largest accounting placement firm, I believe, in the U.S. or nationwide, one or the other, if not both. So I started working for them as a financial consultant. So that means I worked full-time for Robert Half. I will go into different companies. I kind of explain to people, situation is pretty much they're my pimp. They tell me where to go, I go make the money and bring it back to them. That's what happens. That's how it goes. Whatever the company wanted me to do, whatever accounting and finance, I worked for them. I was salaried with them, benefits, vacation, everything through Robert Half, which at the time I didn't know was a great opportunity because I learned accounting fixing people's problems. So that's why I'm a little backwards with the CPA thing, is because I was never really, finance and accounting are two different worlds. You don't have your debits and your credits, then going all the way back and then really learning it from the top down as opposed to building it. I was learning, okay, well, this is what happened, what needed to get fixed, but that created that understanding. Because what happens now is that clients come to me, every last one of my clients is a problem child. Every last one of them come to me with issues. They have something to be fixed, but I'm not scared to fix what their problem is because that's how I learned to do accounting. So we don't understand why we're going through things. We don't understand why we're in this situation. But longer, and I know all of you have your testimony, down the line it gets revealed to you of how this all comes into play. So that's my current business, CEO of Signature Tax Solutions. We do accounting, taxes, bookkeeping. We file nonprofits, we file businesses, you name it, pretty much we do it besides, I guess, what we're in the parameters to be able to do, obviously because I don't have that CPA license yet. I'm going to get it. I tell people all the time, you better come to me before I get that license because the price is going up. So I'm telling you now, get in when you can. Other things that I do, I mentioned that I am an accounting professor at El Centro. I teach QuickBooks there. So I certify people in QuickBooks. So I guess you want to call me a guru or whatever in QuickBooks. I use QuickBooks Online, QuickBooks Desktop. Also am the co-founder and director of finance for a nonprofit that my mom and I have called the Child Core Foundation. We do summer food programs. We also have a mentoring program that we call See It, Touch It, Be It that we're in the middle of launching. And See It, Touch It, Be It is a program, I guess from my vision of meeting professionals that can reach back to the community, because we go to school, we get our degrees, we start families, get our houses, but we don't go back to the community, meaning going back to the schools and letting people know how we got there. So people will look at you and be like, oh, you got it all, you did this and you did that. They don't see the struggle, but they don't understand the struggle. They think they're the only one struggling. Like, no, 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 no. Let me tell you, and so they can see, oh, okay, well, you experienced this too, you experienced that too, because we don't talk about it. We don't tell people what we're going through. We just kind of deal with it and move on, so people don't understand that we relate to each other because we've went through the same struggles. So the See It, Touch It, Be It is meant to, I guess the slogan behind it is, if I can see it and I can touch it, I can be it. And what comes to my mind is the picture of Barack Obama with the little boy touching his hair. So, and he's like, all he wanted to do was touch Barack Obama's hair. Why? Because he could see it and he could touch it and he felt like he could be the president of the United States because the president of the United States has the same type of hair that he has. So that's sort of the ideal behind See It, Touch It, Be It is if I can have a doctor who's the same shade as me, you know, or who has the same type of hair as me, or who's the same size as me, or if I can see an accountant, or I can see someone, and there's nothing wrong with athletes or celebrities or anything like that, but for Black people, it's just like that's what everybody aspires to be. And it's not just for Black people. You have my staff, I've had a lot of variety of different cultures. So if you're Asian, people think you're gonna be an accountant, you're gonna be good at accounting. Maybe they wanna go play basketball. Maybe they need to see somebody who's a basketball player who's kind of short and thin. Or you have Middle Eastern. I had a girl who, her parents were mad at her because she wanted to do marketing. They told her she needed to go do bioscience. I'm like, my mom ain't never told me to do bioscience. But you know, we all have these same issues because we all stereotype ourselves into a certain position. In Michigan, everybody go works at a plant. You don't need to go work at a plant. I mean, there's nothing wrong with people who do, but if you don't, your parents, your grandfather's grandfather, you doing it, your parents did it, everybody in your neighborhood do it. What is something outside of the norm that you can do? And we don't think we can't do it, and we all think we can't do it because we don't do the research to understand how it can be done, or we're not introduced or shown people who look like us, regardless of what it is. I don't care if it's somebody with big feet. You got insecurities with your big feet, and you look like, dang, her feet big, and she... okay, I might can do it too because her feet is big. But that's the ideology behind See It, Touch It, Be It. So that's a little bit about myself, sort of where I've been, where I'm going, what exactly is that I want to do. Any questions about any of that? No? Okay, we can move on. So today's topics, we're going to get into really just the tax industry, some facts behind the tax industry, how to avoid some scams. the new tax law, and then also maximizing your refund. We're going to talk about maximizing because after we get done talking about scams, because people always call me, hey, you could give me more money back. No, I can maximize your money. I'm not going to jail. I don't go to jail. No, I can maximize your money. And I have so many people in email blowing up because, you know, people want to tell them they can get them more money back, and they have gotten them more money back, but now the IRS knocking on their door 4 years later. And they unpaid them all this money, and now they're gone. So our first topic, the tax industry. So for the U.S. Government in 2016, the tax receipts totaled $3.27 trillion. So you hear all the time about how they're talking about the budget, like, oh, we're trillions and trillions and trillions of debt. Don't get me wrong, it's a lot of money. I don't have trillions of dollars in my bank account. I probably got 1 zero. But you have all this money that they've received in tax dollars and understanding where your money's being spent. People are like, oh, well, you know, I had conversations with my brother, and they were telling me, oh, well, I don't have government assistance. You don't have no type of government assistance? Just because you don't receive food stamps don't mean that you don't get government assistance. You went to school, didn't you? That's what your tax dollars are paying for. You got roads, you got waste management, you got city pools. All this stuff is being paid with tax dollars. So this is the reason why we pay taxes, is because of this. And they're like, oh, I don't know why. Understand where your money's going and why your money's spent. And that's, of course, your local representatives who you can speak with and be able to really understand what your money is being spent on and why it's important for you to speak and represent yourself, because this is your money being spent. Also a fact is that people, of course, everybody they don't want to pay anything. I want to pay taxes. I want to keep all my money in my pocket. But there was a survey that says only 51% of people feel like they paid too much in taxes. And that's actually good, because though obviously a lot of people understand, not enough, but a lot of people understand that there's a reason for those taxes. So no taxation without representation, that's where that comes from. If I'm going to pay taxes, I'm going to need a government that's going to represent me and where my taxes are going and what's actually being paid. Some of the big things, we're going to talk about tax deductions and tax credits, but just a fun fact, so I guess, on one of the tax credits is the earned income tax credit. That's a big one. They'll send out letters, you know, it's all about radio. I mean, everything that's always broadcast or earned income tax credit, because it's one of 2 refundable tax credits that you can get. So in 2016, there were 2.7 million returns filed that were for the income tax credit. And there was 7.2 billion paid out on that earned income credit. So this is why all these letters and everything goes out, because if it's your money and you can get it, then you need to maximize on their opportunity. So that was an average of $2,714. So with the earned income credits between the age of 25, I think 60 is who can get it, and there's a certain income threshold. But if it's applicable to you, then you need to be maximizing that opportunity and getting that earned income credit. You'll notice too on the slides, kind of put in a couple quotes here and there, just to go over these quotes and seeing that it's applicable to. So for this particular quote, it's by Emo Phillips, and it says, "A computer once beat me in chess, but is no match for me in kickboxing." So what you all need to realize is that, you know, some things you can win. As they say, you can't beat them, join them. In this situation that, you know, the computer is going to be smart. Let the computer do what it needs to do, but realize what your talent is, but don't go kickboxing a computer, because now you're going to be without a computer. But, you know, so just understand where your talents lie and where you can and cannot maximize what it is on the potential, I guess. So we talked about or mentioned the earned income credit. So these are some of the credits and deductions that are applicable for individuals. Can you guys see the screen okay, or do we need to turn some of the lights down? Maybe hit that one. Turn it one up. Carla, is she back there? Oh, there. Thank you. There we go. Thank you. So some credits available for individuals is the earned income credit, which we just discussed. You have the child tax credit, which is the other refundable credit that you're able to get. That's $1,000. You have your standard deductions, your health coverage. So a big one people always forget, and I always have to remind my clients every year, what are your premiums that you pay out of from your job? If your job pays your health care, you still pay some type of premium. I always tell them, pull out that last W-2, let's look at what your premiums paid, and then you also have out-of-pocket expenses that you can deduct for your health care premium. So, but there's a threshold. It's 10% of your adjusted gross income before that health care deductions actually kick in. So if there's a big, I know last year I had surgery, so by the time I had surgeries, paid all these prescriptions and this and that, this year it might be applicable to me. But for someone who's healthy, that deduction you may or may not get because you don't have that much in deductions. If you're self-employed, you may get it because if you're paying for your own insurance through self-employment, some people pay $1,000 a month for insurance. So it can be very expensive. So that's one of the deductions that people always seem to forget about, especially those out-of-pocket expenses. So if you're going to buy whatever your prescription is, you need to make sure you keep track of that. Dental and vision will fall within that as well. The other thing is retirement savings, your 401k. Not only is it important for your future when you retire to contribute to your 401k, but also for tax purposes, you get a deduction for your 401k. Your Roth, and there's other ones that you can deduct as well, but it's important. That's just, and you know, who knows the difference between the 401k and the Roth? Any? A Roth IRA. Roth is not tax deferred, meaning that when you contribute to Roth, it's after tax. You've already contributed to it after tax. So let's just say you received your paycheck and you decided to contribute $100 to your Roth IRA, so you've already been taxed on that income. 401k is money coming pre-tax, so it's coming out. So that way, that's why when you take your retirement out, you get taxed on that because you were never taxed when you were working. So the ideal behind it is that when you're retired, you're going to be in a lower income tax bracket. That's sort of where the benefit comes in, is that it puts you, obviously your 401k contributions, when you're retired, when you're older, you're in a lower tax bracket because you're not making as much money as you used to make. That makes sense? Okay. Then we have mortgage interest credit. So when you buy a home, you're able to write off your interest from your home as well as real estate taxes. We're going to talk about the new tax laws and how it differs, or the differences between now, because it's like, okay, well, I'm learning this about today, and if I file my taxes today, but 2018, some of this may be completely different, and we'll discuss that. The other thing that people miss a lot too, especially if you already own a home and you're upgrading homes, is your energy efficient property tax credit. So if you go and buy energy efficient AC, you know, those things could cost $7,000, $8,000, $9,000, $10,000 to do that. You get a credit for that. No, you're not going to get $10,000 back, but you're going to get something back, and your taxes for having energy efficient appliances. Windows will fall within that as well. Then you also have the American Opportunity Tax Credit. The American Opportunity Tax Credit is for those, anybody in school? Yes, what you going for?
I'm a theater major with an emphasis in education.
I'm sorry, say it again.
I'm a theater major with an emphasis in education.
Okay, awesome. So how many years you been in school?
3 years.
3 years, okay, that's not too, okay, so you still get to take advantage of the American Opportunity Tax Credit. Are you doing that when you file your taxes?
I did file my taxes.
Oh, you file for it, okay. And so making sure you take advantage of that, and also your out-of-pocket expenses for school, which is what people always forget too. So your books, any requirement of school fees not paid directly to your school, you could deduct that along with the American Opportunity Tax Credit. So you know you get your 1098-T, which comes from the school. It tells you how much you paid them directly. But if you had to buy a laptop in order to do your schoolwork, your books, some supplies, you know, don't go crazy. You can't be like, look, I had to buy an outfit for school. If it's a uniform, like if you're going for nursing school and it's a uniform, that may be applicable, but don't be like, look, I had to look fresh for school, so I'm not. IRS coming back to ask you, what did you buy for this $10,000? So, other ones are, and then also applicable to school is the Lifetime Learners Credit. So just because you've gone to school 4 years and beyond doesn't mean that you don't get a credit as well. So for those who are lifers that love to go to school, unlike, you know, I'm gonna say I do, but I don't. It's a love-hate relationship, but you still get a tax credit as well if you've gone to school beyond 4 years. You don't get the American Opportunity tax credit, but you can still write off those expenses paid directly to schools, and then also those out-of-pocket expenses that are directly related to you going to school. Anybody in here have a business that they own? You own a business? What's your business?
Real estate.
Real estate, okay, awesome. So what do you use to keep track of your business?
I just do, is it the profit and loss statement every quarter?
You do a profit and loss? Okay, do you just use Excel, pencil, pen, QuickBooks, pencil and pen? We're gonna get you together, yeah, we good. It's somewhere, at least you keep a track of it and be like, I don't know what happened, look at my bank account. So businesses, and everybody, as I said, you are your own brand. When you're a brand, you're a business. So it's important that you keep track of your personal, because you don't know what you spent in healthcare. You don't know taxes, especially. Another one I didn't include on individuals I just thought about is sales tax. You can write it off this year, but it's an and or next year. But sales tax, if you make any large purchases, such as a car, I don't know if y'all buying yachts or anything, airplanes, but any large abnormal purchases you're going to pay a substantial amount of sales tax, you can write that sales tax off as well if you're itemizing your deductions. So back to business, you have your deductible business expenses. So depending on, for real estate, your deductible business expenses, a huge one's going to be, for you, is mileage. You're going to go show homes. So if you're going to go show homes, and where people get confused a lot of times, and I'll give you an example, is I have a client, or I have someone who reached out to me. They just got, they were getting audited, and they sent me their paperwork. They were like, hey, I'm getting audited. Can you just take a look at this and see, what I can do? So they sent me the paperwork, and they filed as, it was her mom and her sister, and it was a family member who was doing their taxes. So she was like, well, all I did was send her my W-2s. That's it. I don't know what else is on here. I don't know why there's any extra stuff. So that's why we have to be educated in what is being filed, so that way you can read your tax return. I tell my clients all the time, review this, look at this, because I'm human, I make mistakes, but I'm not going to just start filing no bogus stuff, but make sure we understand exactly what's being filed and you know what's on your tax return. So this particular person, she sent me over the stuff, and I'm looking at it, and it says, it's a reason why the IRS asks for particular information. It says occupation, teacher, itemized deduction, $22,000, itemized deduction. Okay. Let's take a look at this itemized deduction. This is what the IRS is gonna do. They're gonna go straight down to the itemized deduction. They say, auto, $21,000. What did they file for $21,000 on the auto? You a teacher. Okay. Now, you could have $21,000 if you have a business and you're writing off let's just say if you had a vehicle for real estate, you ain't got to go buy no Lamborghini, but if you did Mark's depreciation and you got let's just say a Mercedes, you like, hey, not anything outrageous, but you got a car, you could very well have, I wouldn't say 21,000, but you can have a large depreciation in that first year, which would be understandable. But they're gonna look at it, they're gonna say, well, this person is a teacher and they got $21,000 in automobile deductions. What did they deduct? Depreciation? Well, not depreciation, it was mileage. $21,000 in deductions for a teacher. And I go look at it, it said 46,000 miles, total miles for the year, 37,000 miles business, and it was employee-related business expense or employee-related expenses. So I'm like, 37,000 miles? First of all, who driving 37,000 miles in 1 year? Who's doing it? And then you a teacher. You driving from portable to portable? I'm not understanding why you got 27,000 miles. Now, you very well could have some miles, especially if you're a principal or you have to go to off-site meetings or different things like that. But what people don't understand a lot of times with business mileage, it applies to individuals and businesses, is that you can have, you can write off business miles, but you can't write off miles going to your first destination. So if you're going from home to destination A, for your example, your first house that you're showing is not is not a write-off. But if you're going to show house number 2, it's a write-off. If you're going to show house number 3, it's a write-off. If you go to number 4, it's a write-off. But from 4 to home, is not a write-off. So your location to and your location from is not a write-off. But this is a teacher writing off 37,000 miles. It's a red flag. What happened? They got their money. The tax preparer is paid. They've been getting paid, and what they probably doing, charging flat fees. And I'm gonna get on these flat fees and paying out of bank products and all this other craziness that happens in this industry. But that's what happened. And people, this is why a lot of, and it's the business clients I had it, at the same token of, I had a client who, his, most of the bookkeeping clients that come to me, they've had issues that's kind of been ongoing for 2, 3, 4 years. Most of them, I go back and do their taxes, not taxes, but their books 3 or 4 years at least, because you can't build your statements on information that's not accurate. I've had clients who, they've come to me and they've had professionals, CPAs, ones that I know been in there for 30 years. They've been a CPA, nothing against you. But you know, they've been a CPA, but if you don't check behind people, all they know is, well, they told me they was a professional. They told me they was professional, so I'm just handing them money. I'm just handing them money. And my client told me yesterday, he said, well, I should have known that one was a crook when I was paying him cash. I said, exactly, because when you try to pay me cash, what did I tell you? Write me a check or pay this invoice, because you need to keep track of your expenses and you need a paper trail. If people are not telling you these things, they don't have their best interest in mind, because what they've done, they take that money and they stuck it in their pocket. You think they reported that money? When you go to report contract labor, do you think the IRS gonna be like, well, you had $80,000 in contract labor? That's people like, oh, I always pay my people cash. Why are you doing that? Because when you're going to go file your taxes, you cannot count that contract labor because you have no paper trail of you paying these people. You ain't filed no 1099s. You ain't got no checks, no cashier's checks. You have nothing to show that this money's paid. So you know what the IRS gonna say? Tough luck. You're gonna pay the taxes on that. Sorry. So this is why it's extremely important to understand what you're filing, how you're filing it, and why you need to have that paper trail on everything, individual and businesses. You need to keep your receipts and track of it. The good thing is that the IRS says that you can have a physical receipt or your bank statement as proof. However, with a bank statement, you go to Walmart. Did you go buy a TV or did you actually go buy supplies? There's not really a verifiable way to know what you brought from Walmart. But they have tools, I mean, your phones. We'll talk about your phones and just what great tools that it has, but you can take a picture of a receipt. QuickBooks has it where you can attach receipts to transactions. So there's so many different options available for you out there, and you have to protect yourself as a taxpayer, because you think that family member helping them? They even pay for audit protection. I'm looking, I said, girl, you paid $60 for audit protection. You ain't calling? Oh, it's no point. Right, it's no point because you have nothing to prove those actual expenses. So, and she unpaid an extra $60 for audit protection. She unpaid $50 for them to get their money out this one. She unpaid $500, $600 for these returns. But guess what? She got to pay $3,900 in these taxes for the year that she was audited. And then it comes out that if she's audited for 2015. So once 2015, they find out she actually owes that money, you think they ain't gonna audit 2017 or 2016 or even go back further if they possibly can? It's a red flag. So once you're kind of red flag, they're gonna keep looking for that information. So you have to make sure that what you're filing is viable. And I'm gonna get to professionals that are filing your taxes, but ask questions. If you can't ask your tax preparer or whoever's doing your stuff questions and they get an attitude because you want to ask them a question, you don't need to be doing business with them, because you need to understand they should be able to tell you, when I do my bookkeeping clients, when I do my tax clients, I should be able to trace everything back to you. They tell me something on the phone, okay, can you do me a favor and email that to me or text me that information you just told me? Because I'm CYA for myself and I'm CYA for you, because you're gonna ask me, okay, where did this come from? I'm gonna be able to tell you exactly where it come from and show you where it come from as well. So that's just sort of my, as they say, soapbox for keeping track of all your information, not only holding who you're having your tax preparation done for accountable, but holding yourself accountable as well to understand what your taxes done. People just want to lay it out like, I don't care, you do it. It's good to have that faith in that person, but let me just explain to you what I did so you know. But For businesses, we have our standard mileage rates. We talked about home office is another big one. If you, that's one I kind of encourage, especially if you have if you work, period. If you work from home at some point or another, if you go home late and you're working, or you got a small business or a business period and you're working from home, then you can take your square footage compared to your total, the total square footage of your home, and you can write off certain things such as utilities, if there's a repair and maintenance. Don't be putting in a new pool talking about trying to write that off. That has nothing to do with your office. It has nothing to do with your office. But if you went and brought a computer for your home office, or you had to go buy a trash can, or you had to go get a desk, or you had to decorate, or I ain't gonna say anything outrageous, but something for your home office that's applicable, you can write those things off. So they have a column when you pull up this form that's directly related to your home office, and then that's just overall for your home. So it's important to keep track of that information, because that's a great deduction that a lot of people miss for not only businesses, but for individuals if you have a home office. Other thing, business use of your car. We talked about pretty much that's going over the mileage, but also other expenses for business use of your car is if you're doing, you can also itemize it out if you're not going to write off the mileage, such as gas, repairs, oil changes, toll tags, the interest. You can write off the interest on your vehicle for a business, and there's a few more, but those are some of the major ones that you can write off for a business use of your car. But you can do one or the other. You can't do mileage deduction and, you had a question? Oh, okay. You can't do mileage deduction and the itemization of the car expenses. Other thing is depreciation and amortization. So we kind of spoke on it. Let's just say if you go buy a car, and this is why you'll see a lot of times with cars that people purchase for business uses, if you're doing real estate or whatever the situation may be, you can write off your car and you can depreciate it. There's straight line, there's double, there's so many different options for depreciation. You just really take the best method for you. And there's another one called Marks where you get to take most of your depreciation. Everybody understand what I'm talking about when I mean depreciation? Anybody not understand? Okay, so you get to, okay. So what depreciation happens, let's just say if you go buy a car for $10,000, you can't take that entire $10,000 as an expense, because depreciation says if it has a future value, then that means you need to spread it out over the time that value is useful. So for instance, if you buy a $10,000 car, you can't write it all off in 2017. You have to spread it out over, I'm gonna say 5 years to make my math easy, but 5 years, so that way you're now depreciating $2,000, and that's if you're doing straight line depreciation. So say it gets a little tricky, but if you're doing straight line depreciation, you're now able to deduct $2,000 over the next 5 years, as opposed to taking that full $10,000 out in that first year. Otherwise, everybody just go out and buy a new car every year, trade it in, get a new car, trade it in.
You can do that on top of the mileage or the other items?
So you can do, yes, and that is correct, right? Yes, you could do both. You could do, so it's mileage or your itemized sort of car expenses, but depreciation gets taken off. On top of those, yeah, one or the other for the other. Yes, good question, thank you. The other thing is business travel. If you travel, let's just say a convention, you have and these are same things for business employee related expenses as well. If your employer is not covering these expenses, you can write it off to a certain extent. But for business travel, let's just say if they got accounting conference in New York, I can go and write this business travel off. But this is where it all gets tricky. If I'm like, hey, I'm going to New York, yeah, it's a business conference. The business conference is 2 days, but I stayed there for 5 days. I cannot write off that entire 5 days. I can only write off the 2 days for the business conference. I can write my flight there, but I cannot write my flight off back because I was there for pleasure as well. So I would only be able to do one of those flights there. Same thing with this thing. Sorry. Same thing with if you do Like while you're there, those 2 days for your business conference, if you had to get an Uber or you had to do a rental car, or, you know, for your hotel, your food, all that's pretty much deductible, but it's deductible based on a certain percentage. So that's where, you know, you can work with your tax professional and see what is or is not applicable. There's another thing called GSA rates, which is your government standard. What does that stand? I don't know what GSA stands for, but government, it's called GSA rates. GSA.gov is where you can go and find it. But they allow you to do a certain amount. Government saying, hey, we know, especially doing travel or doing contract labor. Recently, I did contract labor to where when Harvey and Irma hit, I went and worked with FEMA to do home inspections. So with the home inspections that I did, obviously they would pay for certain parts of the hotel, well, pay for hotel and all this other stuff. But what happens is all this information showed up in my 1099. So here it is, my 1099 is pretty much inflated, but the government, so since I was gone for 2 months, that's a lot of receipts to be keeping track of, especially when it comes to meals, your hotel, your car rentals, and all this other stuff. Okay, that's what it is. Thank you, Government Service Administration. You have your GSA rate, so what the government, say it one more time, government. Thank you. I don't know why I can't remember that. It's not hard. Government Service Administration says is, okay, well, we'll give a standard amount of what's deductible for a tax rate. So you may not have to keep that exact receipt, but they may say, hey, at this location, at this city, on this date, you were able to deduct $200 for a hotel. You have your meals and incidental for $60. So it makes it a lot easier, especially if you travel a lot, to be able to have these deductions, to be able to use those rates. The other thing, business meals and entertainment. So what, for business meals and entertainment, that's another huge one that gets mistaken along with mileage, is that, you know, just because you, especially if you own a business, just because you go eat doesn't mean you get to write off your business meals and entertainment. This has to be an actual business meeting, preferably with someone else, unless you're a little crazy and you got two personalities and you can convince your auditor that you had two people in your head that you was eating with. And it has to be business related. As long as you talk business, I don't care if you talk business for 2 minutes, you can write off this business meeting meal and entertainment or whatever it is that you have. Entertainment comes in. I have a client who does football camps. So he works with different football camps and he loves going to the strip club. I'd be like, what? You can't write this stuff off. What are you doing? He said, no, this is where coaches like to go. Okay, if you're going to explain that to the IRS, I don't care. If you're going to explain that Candy had to, I don't know what's going on, but this is where he, you know, okay, whatever. Just whatever you want to do. But this is your entertainment. I mean, if you go and, what's the other, I'm trying to think of, where they go and have the little night thing. But I mean, any really entertainment, if it's a show, but there's certain thresholds. Another one I didn't talk about, and we'll get to, is client gifts. And that's with client gifts, you have a $25 limit that you can give for client gifts. So I'm going to actually be giving out a client gift for you guys today that's going to be here. And actually, I'll start this sign-in sheet if you don't mind signing in and going around. And we'll pick from there that we're going to give out a gift card as appreciation for you guys for being here today. Our quote here is is from Margaret Mitchell, and she says, death, taxes, and childbirth, that's never a convenient time for any of them. So that's just, I mean, I just love that quote because that's what people, they come in, they walk in my office, they drop this load, and they just stress, but they're so relieved once we're done with taxes because it's like, go ahead and let's get this out the way because you best to believe it's not going anywhere at all. Then we have current tax scams. So tax scams is not anything new. They've been around for ages and ages and ages. I mean, it's just criminals that, period is everywhere. So then you have, especially with so much cybercrime going on now, you have to really protect yourself as a tax preparer and a taxpayer. So some scams that are currently, I guess a new scam that's targeting taxpayers is you have where they're filing these fake tax returns under your name, which is nothing new. But what they're doing, as opposed to putting it in a random bank account, they're actually putting it into your bank account. Then they'll call you and say, hey, we did this, yada, 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 we didn't mean to deposit that money, or whatever the situation may be, and then it comes out of your account. So then when you go file your return, the IRS is like, this return's already been filed. And they're like, no, I haven't filed it. But they looking and tracing, and they're like, ain't your account ending in such and such, such and such? You can be like, yeah, that's my account. They be like, well, we put that money in there. And you ain't got nothing. You ain't got nothing. You can't file your return. You know, the money's gone. It's kind of hard to prove because you're like, hey, this came to my account. So that's just, but the IRS at this point is aware of the scam, which is a good thing. You're just gonna have to go through a couple more hoops. But of course, this information needs to get reported to the IRS as soon as possible as you of course, discover this information. So that's one to be aware of. The other thing is that with the IRS is never going to call you. So you'll see the IRS impersonation. Actually, that's the next one, a telephone scam. The IRS is never going to call you, let alone they're not going to call you and request your social security number, banking information, or any of that information. The IRS will send you letters. They love sending letters. So if you have that letter, making sure you respond back to the IRS. Because people love not responding and think it's going to go away. No, they don't forget. They do not forget. I don't care if it's 6, 7, 8, 9, 10 years ago. My dad just went through a situation where they actually they sent him letters about 2004 and 2005. It was over 10 years old. It does not go away. They're gonna come back, I don't care if it's 10, 15 years later, and address this issue. So you make sure as soon as you receive it to address it and get it resolved, because what's happening is that interest is steady piling up. It's steady piling up. The other thing I suggest, of course, it's all type of phone scams out there, not just related to the IRS, but people call you like, hey, I can get you this vacation package, yada, 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 yada. I'm from Hilton Hotel. Oh, you from Hilton? Okay, well, what's your number? I'm like, I'm gonna call you right back. I'll call them right back. If it don't say Hilton Hotel when I call back, I wanna talk to you. I don't want to talk to you. I need your voice automated system or whatever it is to be professional, because don't be talking about, hold on, it's Hilton, because that ain't Hilton. I know Hilton, that ain't it. So just call back. That's what I suggest. I'll be like, hey, give me your number, give me your website. Let me research you. Let me understand who you are, to understand you are a legitimate company and who I'm talking with. Because you don't want to miss out on great opportunities. I mean, I got a great booking with Orlando, going through Hilton, but I was talking through Hilton directly, and they're like, okay, let me transfer you. Or they can tell you, I'm like, hey, somebody called me. They should be able to tell you if somebody called you or not. And they can be like, no, we didn't call you. Don't call that person back. Don't talk to that person. And definitely don't give them any of your personal information. Because really no company is going to call you and ask you for your personal information over the phone, because they know it's so many scams out of there. I really can't think of one that'll call you and just be like, hey, yeah, I just want to make sure your social security number the same. It is. It is. Don't worry. Whatever you got, keep that same number. Don't worry about it. So we talked about just taxpayers, but tax preparers, of course, get targeted as well. This is why you want to have a professional, because you want someone, and I'm going to say professional, but you want someone who's going to safeguard your information. That's extremely important, because if you got somebody, your next door neighbor, doing any of your tax returns with your social security number, address, and everything else, probably your ID, sitting on their kitchen table, and they cousin walk in, now they got all your information, this one got all your information, that one got all your information, and then now somebody's filing, now they open up a credit card or something in your name because your information was sitting on somebody's kitchen table. But that's where, as a professional, you make sure that you safeguard that information. Another one out there for students and also targeting parents is the federal student tax, in which they are calling college students, of course, because you don't know, saying, hey, you have to pay a student tax. But if they're calling like, hey, you got to pay $25, $30, $40, you like, okay, well, that's not a big deal, but they do this to millions of people. These people have made a lot of money, taking from college students who just don't have that knowledge. So it's good to educate yourself. If you ever receive a call from the IRS or you have any questions, call the IRS directly at the 1-800-829-1040. That's their number. They have to notate accounts. They also give you their ID number. Somebody call you and say you're from IRS, what's your ID number? Okay, well, I'm gonna call you back and ask, was that ID number notated on my account? And then, of course, we kind of talked about professionals and people preparing taxes in this industry. And when I got in this industry, I never knew how really scandalous the industry is, because they have these programs to where, let's just say flat fee. I'm gonna charge you 500, I'm gonna charge you 500, charge you 500, charge you. Everybody paying 500. But your tax return ain't the same as this, and nobody in this room tax return is gonna be the same. I don't care if you work for the same place, living in the same neighborhood, everybody's tax return is different. So I don't charge people a flat fee, because somebody who in college that got 2 tax returns shouldn't be paying the same amount as somebody who over here with dividends and this and that and this and that. It's based on what forms that you file. So another one is, and I just can't get with it, is bank products. So what they do, I even have my family member, hey, you gonna take my money out of my tax return? No. I'm not. Because what happens is they're charging you $50 just to get a tax preparer their money when their money come out. No, what you're gonna do is I'm gonna send you this invoice online, and you're gonna put your own banking information in there, and once you get your tax return, pay me. I know when you're getting your tax return. So I know, I got all your information. I know within 3 weeks, you should pretty much have your tax return back. I make my invoices due in 3 weeks. You just pay me when you get your money. Because by the time you get through doing bank products, getting your money put on a credit card and all this other stuff, you unpaid $300-400 out of your tax money. People don't know this because they don't see the money, but out of your own money that should have been in your pocket. And that's just how the tax industry is, and that's how a lot of tax preparers make more money. Maybe I should get with it, I'm not sure, but I just can't. I just can't right now. I just can't do it. I just don't understand it. And as a person who really cares about personal finance, I'd rather that money be in your pocket than necessarily mine. Because if you benefit, then you're gonna tell everybody else about me, and that's just how it works. So our quote on here is, fool me once, shame on you, fool me twice, shame on me. That's from Anonymous. But in this situation, when it comes to scams, you shouldn't be fooled the first time, because that first time should cost you. So this quote is not really applicable to scams. Do not get fooled the first time. Be on alert, be aware. If you are scammed, because I know I've been, especially when I was in college, scammed twice, had to pay $7,000 out of bank account. It happens, but it won't happen again. I bet you that it won't. So then we have the big one, of course, is the Tax Cuts and Job Act. Some of the things that we'll kind of go to and look at a couple scenarios, and I'll just kind of give my feedback on this particular new tax law. And there's going to be, actually, can you pass the paper around? Thank you. So he's going to pass out a paper, and this is just sort of some of the things that we want to highlight on this particular piece of paper. And then we're going to go through some different scenarios and look at if the tax cut is actually going to be beneficial to the taxpayer or not based on their circumstance. So in 2000, it's going to be applicable for the 2018 year. So when you file taxes in 2019 for 2018, this is when these tax laws go into, is going to be applicable for. So in for 2018, with this tax act in effect, there's a lower tax rate for corporations. So they go from, as you can see, of course, they go from 35% to 21%. But that's okay. Educate yourself. Because if you're a small business owner, what you do? I'm a corporation now. You think I ain't gonna be no corporation by the end of April 15th? You crazy. Because I want my 14% tax cut. You know what they doing, then just go ahead and do what okay, I'll play this game with y'all, I appreciate it. The other thing is you can only deduct property taxes or state and local income taxes. So we talked about the sales tax if you buy a large item. So if you're doing property taxes, you can't do the write-off for the large item. But if you don't have a home and you purchase a car or something, you can write off the sales and local income tax. So you don't get to do both anymore, you get to do one or the other. Next we have mortgage interest deduction is preserved for new mortgages on a first or second home. We kind of had this conversation brought up yesterday, and I guess what we found is that, I guess Clifton looked into that, thank you for that, but you are grandfathered in if you already have a home purchased by, I think it was December, it's like December 17th or something like that. You're kind of grandfathered in, and if you were kind of going through a contract phase, it has to be closed by January, I think it was 3rd or 4th. It had to be closed by then. Otherwise, if you're going to buy, let's just say another home and it's not your first or second home, then you won't be able to buy that mortgage interest off, is what this is pretty much saying.
So everything else remains the same. You are able
Yes, if you already own your home. The other thing is that, of course, small businesses can continue to write off the interest on their loans, which is great. There is of course, we know the Obamacare. They're trying to kick out, obviously, Obamacare. But so starting in 2019, it's not actually this year. So the insurance, the mandate to have insurance, otherwise you'll receive a penalty, still continues on through 2018. But starting 2019, you're not going to have that requirement of insurance. So that's the big one. But we'll go through really quick because I know we're running very close to time, but we'll go through a couple scenarios of what the actual, just a couple of calculators and a couple scenarios. So here, somebody just take a quick look and let's go over a couple of them. Let me know who you want to do. James, Jason, Amber, I don't know who, Kavaya and Nick, Sophie and Chad. Amber. So Amber is single, no kids, $75,000. So what they're saying is that the previous law, Amber was paying $10,366.25. Under the new Tax Act, she's only going to pay, and this is her obligation for taxes, she's only going to pay $8,589.50. So her tax cut, she's actually going to pay less in taxes of $1,776.75. So that's a difference of 2.37% of her take-home pay. And where they're saying that difference comes in at is that, of course, her, and I guess let me show you this. Of course, her take-home, her household income is remain the same, but her taxable income goes down by $1,350. Her income tax credits goes, it goes down, so that allows her to have more. Oh, I'm sorry, that is her credits there. So yeah. Can we cut that? Sorry, the first light off again. Sorry. Or maybe it's just, okay, thank you. So the income tax credit, she had $1,776.75 in which she's getting back, and they really don't, hold on, let me scroll down a little bit, because this is where they kind of explain where the breakdown is. Uh-oh, was it not? It's another one. I'll go to it. If we have enough time, I'll go to where the explanation of those breakdowns are. Can we get one more? Anybody want to look at? Jason? So Jason's single with 2 kids with $52,000. So there, with Jason, his income tax cut is approximately, meaning he's paying less in income of $1,892. Based on his, and we'll explain, and then his taxable income tax before credits. Okay. So it's trying to say his taxable income is going to go down by $4,000, and that's because of the, let's see here. They have explanations. Let me go back.
Probably the highest standard deduction got it on.
Hey, let's go back up. Go back up to what you were showing before.
So this right here, it explains why. They give the breakdown. I thought when I clicked on these, they gave the explanation. What are you looking at?
Jason, look at Jason again. Click on Jason. And then go down to take a closer look. Yeah, right there. So we got the income's the same. Taxable income looks like it went up, right?
Yes, but they don't explain why it went down. That's why I was.
Income tax before credit. Income tax before.
Oh, I'm sorry. I'm looking. Yes, I see. Okay.
Then income tax after credit. So it looks like it's credit. You know,
Income tax after credit. Yeah.
the child tax.
Like the child tax credit. Well, he has no kids, right? Let's take a look. Oh, it's 2 kids. I'm sorry. That was the other one. Okay.
So it gets kind of complicated, but just like some things.
You give a little and you take a little. That's exactly what happens in here. And that's what, there's a further explanation. I can definitely give you guys this link. If you look at it at the top, if you want to write this down, but this is a great resource to use, and that's the taxfoundation.org. And I like to use them because they don't have, a lot of places have biased opinions. So, a lot of time with organizations, they're going to, especially nonprofits, they're going to give you just the information. They don't want to try to. Okay. They don't want to try to sway you one way or another if it's good or if it's bad. They just want to give you the facts and you take the information. Also, this particular website is good because you can put your own custom information in here and you can see how it's going to benefit you. So for my clients, it does give, when I do my taxes, my clients' tax returns, it gives them the potential effect of the new tax law. What I've seen personally on my own clients under this potential new effects is that most of them, it's a difference of $100, $200, $300. I have not seen anyone yet that I've filed that is of great significance. So it's like Clifton said, it's give a little, take a little. I haven't seen anyone where it has an adverse effect yet, but the only one who on here, I don't think it was James. Who was it? Someone, sure, while I look for this one.
So this is where, the takeaway I get from this, and Brittney and I talked about it, you know, you can go to H&R Block or some of these other places to do your tax returns, and what they do is they actually look at what you already did in 2017, and they complete a form to make sure that you complete your tax returns correctly, and that's in the past. But what Brittney's talking about here is how the new tax law is going to affect you for 2018, which is not just getting your taxes done for 2017. So this is important to where, this is a workshop where you're getting some information, she's going to give you a website so that you can empower yourself, but one of the actions that I want to give you an opportunity to identify is going to a professional. We want you to be astute when you sit down with a tax professional, a financial advisor, a mortgage officer, or whoever, so that you can sit down and look at your own personal situation and get a plan out for 2018. And that's what this is about. This is, you know, get your tax return done, but then get a plan for what you should be doing now in February, so that in January of 2019, you're not going to wish, oh man, I wish I knew. But you know, you meet with Brittney, she's going to say, well, I told you so. So
Yes.
I just wanted to bring that up.
And it's not, and
Go so far in today's workshop, but an action is get with a professional to get more details.
yes.
about your situation.
And you don't,
We need to go ahead and give Brittney now,
uh-huh,
so she can get us a plan in place.
exactly.
January 19 comes, we're all good.
You're all good.
Okay, I just want.
But you do, but what people, it's good for the new tax law, but you should be doing that period. And that's called tax planning. And that's why with Trump, they're like, well, you know, he's this billionaire. How is it that, you know, he's had all these losses? It comes from tax planning. It comes from loopholes. It comes from scheming and scamming. But a lot of it is tax planning, and you do that every year, especially if you plan on having a kid, buying a house. You know, I want to start a new business. You need to understand how these tax implications will affect you, and you will make start getting with a tax professional and understand how whatever decision it is that you're going to make, how it would affect you. If you want to go get into real estate, start buying homes, whatever it is, understand how this is going to affect you in the tax aspect. But please write this website down, taxfoundation.org. Take a look at it. See how it will personally affect you. Keep taking a look at this. And the only one, as I mentioned, is Soren and Lena, who's married with 3 kids making $800,000. They're saying that their income tax increase is going to be by $7,800. There's also, when you look at this particular website, they give a breakdown and explanation. So if you see someone maybe similar to your particular situation of why their income tax increased or why it has decreased. So let's just go ahead and finish this up.
Quick point here.
Sure.
The big sale of the new tax plan was that the standard deduction got doubled, but it never really tell us that the personal exemptions are gone.
Exactly.
So everything that you used to deduct for the mom, the dad,
Yep.
and the 2 kids, those personal exemptions are no longer. And that bump is not as big as what you're giving up. Now, the rate is supposed to be lower.
2% lower.
Capitalizing on that. Everybody's situation is going to be different.
Yeah.
If you have over 2 kids, you're probably going to be in the negative. Just want to toss it in.
No, thank you. I appreciate that. So that's why it's like it's good to research and really put in your scenario, because you hear bits and pieces, but it's a lot of giving and taking. And that's why what I've seen for my clients, the only difference is $100, $200, $300 of benefit. And you were like, hey, that's $300 I have in my pocket. But what I explained to people, as I said in the beginning, is that you have to understand why your taxes are being paid. So if you need a police officer, ambulance, anything at your house, and there's no taxes to pay these people to get a faster response, that $200 or $300 may not have been worth the necessary tax cut. So it's great, but you got to understand the bigger picture, which is why, this started from the beginning, which is why my quote on here is, we will see. I'm just going to say, that's coming from me. We will see what happens with the tax law. It's great. Everybody wants a tax cut, but you got to understand the overall picture and not just look at the main focus of what they're telling you. Then we have, of course, we talked about maximizing your refund. So you have the power in your hand, and what I mean by power in your hand, I pretty much see everybody's, and that's going to be your cell phone. This is your power. You can access things like, I use Mileage IQ to track my business miles. So, and it literally, I drive at the end of the day, I say, okay, business, if it's for personal, another deduction you can get is for healthcare mileage. But if it's for business, it's a meeting, conference, going to buy supplies, you track all this information as opposed to having, I see people on paper and pen coming to you, or they just don't have it, then they're getting audited and don't have that information. Mileage IQ. Yes, this particular app is $60 a year, but if you are a business, it's deductible. The other thing, QuickBooks, I mentioned QuickBooks is my best friend. I love QuickBooks. QuickBooks Online is a very useful tool. It's very user-friendly, but they also have a special one called QuickBooks Self-Employed for your Schedule C filing small businesses. For that, it's like $5. I know I can get it because I'm a pro advisor for $5 a month. If you want it, let me know. Just pay me the $5 a month and you can have it. I don't need to make anything off of it. It's just very beneficial to each one of you to be able to use that, keep your receipts. It also allows you to do your mileage. It's very, very, very useful, and that is for the lifetime, as long as you continue to use it. That's lifetime $5 a month, so you can't go wrong with that. And also it's deductible if you're a business. The other thing, tax planning, we kind of got on that. As I said, tax planning begins today. Your tax season, if you already filed, doesn't begin for next year. It doesn't begin from January to April. That starts today, and making sure you're maximizing your benefit or your taxes. We talked about business professionals. One thing I want to say, of course, is and everybody, it's sort of like, it's almost like everybody do taxes, right? It's crazy how many people are out here doing taxes, but you want to make sure someone has credentials. They don't have to have necessarily a master's degree or a doctor's degree or even a bachelor's degree, but make sure they have some type of credentials to put forth the effort to learn the tax laws. Making sure they're ethical. So that's what happens with standard deductions. If you have people like, oh, well, if they'll take anything, because I'll tell somebody quick, I can't help you with that. You got to go somewhere else. I'm sorry. Because if they're just about $1, they're going to accept any and every dollar out there, and you're going to be on your own because that person is unethical. That's why in order to get a CPA, the requirements is being ethical. I'm like, how can they approve? But as soon as you're unethical, they taking your license, because that is a requirement of becoming a certified public accountant. Does that mean every certified public accountant is ethical? No, but it is a requirement, and that is something that you can see. Use your own intuition, and that's trust. In order to trust, my clients come to me and let me know everything. I know everything about that client because they may be talking. I'm like, that's deductible. Oh, you took a mission trip with your church to Africa? That's deductible. They didn't know that, but they're just telling me about their year. We're just talking. So you need someone that can be transparent. I mentioned that it was a new client that came to me, and I was doing their taxes, but my computer sort of faces the client. So I have dual screens. They can see exactly what I'm doing. They're like, oh, my last tax preparer, I couldn't see what they was doing. I just seen them punching in numbers. I said, it's not being transparent. I want you to see what I'm doing. I want you to know what I'm doing, because they probably over there pushing keys. They was done 30 minutes ago, but they want to justify why they charging you this $500 because they over there typing an email or something and they not doing anything. So making sure someone has the credentials, they're ethical, and they're transparent. And then the quote here is, we are what we repeatedly do. Excellence, therefore, is not an act, but a habit. And that's from Aristotle. Here we have the different tax professionals. Their IRS actually has a website. If you go on irs.gov, and you can look up certified tax professionals. And those certified people, and that's, there's different ways to sort of be certified or recognized on the IRS website. And that's the website up there. you see tax return preparer credentials and qualifications, and then you can search, like you can go in there and find my name in there if you wanted to find my name. Anyone who's doing your stuff, you can go look for anybody. The internet's great. You can find all the information you need to know. So there are enrolled agents out there. Enrolled agents are pretty much, I say a step below pretty much a CPA, but they're just pretty much the gurus, and they're like, hey, I just want to do the tax portion. I don't want to do the other portions of the CPA. I just really want to concentrate on taxes and become certified with taxes through the IRS. So they require your prepared tax identification number. That's what PTIN is. They have tax compliance checks. And then also they have here background checks. That's something they propose, and I think that is going to be extremely, extremely, extremely important. So if you can contact your local representatives to make sure that they are on top of this and getting this passed, because the last thing you want to do is get your information into people's hands who there's no requirement to do taxes. You can pick up today, go get a PTIN and start doing tax for everybody in here if you wanted to. So that's extremely important to get a background check. I ain't scared of no background check. Do what you want. So the other thing, IRS test, it says yes, continuing education, it requires 72 hours, and they can represent, they have unlimited rights, meaning that regardless if they did your tax return currently or in the past, they can represent you before the IRS with no limitations. You have CPAs, which is a certified public accountants. We kind of been talking about them. They can represent you for the IRS with no issues. You have attorneys can represent you, and then you have the annual filing season program participants. I fall under the annual filing season program participants, and hopefully I will in the future, hopefully near future, fall within the CPAs, but I have limitation to represent people before the IRS, meaning I can call the IRS and request documentations on your behalf and talk to them on your behalf, negotiate on your behalf, but I would have had to prepare that tax return. If it's a previous tax return, I cannot represent you before the IRS. And then you have PTIN only filings. That's where I mentioned any Joe Blow off the street can go get a prepared tax identification number, pay their $50 and prepare taxes. And that's just pretty much your tax professionals. Now, everybody's situation is different as far as who you need and what you need, and that really is going to depend on the complications of your tax return. If you're extremely complicated, you may need to go to an enrolled agent or a CPA, or you might can just go to a PTIN or annual season filing if it's not that intense. But talk to a professional and see if they can handle it. Can you do my tax return? If it's too much, I'll be like, hey, I can't, you gotta go to somebody else. I don't know if I'll be able to handle that for you. So ask them. Don't be afraid to ask questions. And then just another last quote from me to you is from Michelle Obama, and it's the only limit to your height is your achievements, is the reach of your dreams and your willingness to work for them. So if you're willing to work for them, if you're willing to do the research, if you're willing to do whatever it takes to get to that point, regardless of how hard it gets, then you can achieve whatever dreams, whatever heights it is that's put before you. And then also just thank you. Sorry, I forgot the last part, but that's thank you. And our last quote from myself is, if you're halfway there with knowledge, determination takes you to the finish line. And that's just from me to you. Determination is going to take you to the finish line, because we all have the knowledge. We all have the same opportunities. Some of us a little bit more, but we're not going to get on that, but we all have it. But determination, I'm not brilliant. I'm not smart. People are like, oh, you must be. I wasn't the smartest kid in school, but I was always determined. I continue to be determined. I never give up. I continue going. So you can have the knowledge. Google's gonna give it to you if you don't have it. And then take that information and let determination continue on to the finish line. But that's it. Thank you, Empower Series. Thank you, everybody, for being here. Thank you, Comerica Bank. We appreciate you guys. Another thing I did not mention in taxes, which is extremely important, is Empower Series is a nonprofit organization. You can write off donations to a nonprofit organization. So a lot of people say, well, how can I, they say put your money where you want it to go. If you see someone such as Empower Series, or I have my own nonprofit or any other nonprofit organization that is doing something in your community, give them a couple dollars, because all this takes money. This paper takes money, everything takes money to be able to do. So make sure you're spending your money where you want it to go, as opposed to missing these deductions that you are able to have because you didn't take a charitable donation if you're itemizing your deduction. So that's it.